Ah, okay, so we are back, and I think we are having serious network glitches because of the the weather around here. And, so we are sorry for the uh, breaking transitions that we are actually having. So before in few minutes before the call went off, I was trying to explain uh, certain things to us about how you know, we mark price, how we mark charts. So and I was, you know, so I told us this will be our inducement here, and for major structure, and we can only have an inducement after what the recent high, that's in this downtrend, the recent structure high has been wiped. So I was explaining that once inducement happens, then this becomes a confirm what lower low on a downtrend, right? This becomes a confirm lower low. And what do we expect after a lower low formation? We can have price come here and continue downward, or we have price what seek other liquidities up. We can have price seek other liquidities up. So we can have price seek other liquidities up, up, and as long as price doesn't take out this high, right? As long as price doesn't take out this high, we are always good to go. We are always good to go. We are still in the trend. So what do? We begin to either look out for some things called order flow, right? We begin to look out for where order flow was not fulfilled, or maybe where we have an order block. And in most cases, I may want to be seeking an entry somewhere around here, right? I want to seek a continuation to the downside somewhere around here. And there's a reason for that, of which I will not be able to explain in this particular video. There are reasons for that. So we can have price do anything within this place as long as it has not broken this place. It is still on a downtrend. So we can have higher high formations, higher low price can form all the jamborees that it wants to do. So certain persons can just look at it and be like, oh, price is in an uptrend now. Why? Because we have this is a higher high, this is a higher low, this is a higher high, and boom, they see this happens. Price takes out the former low, and they'll be like, what's happening? Price has taken out the low, so we are this is a change of character. And the next thing we are seeing, price forms, this structure is shifting again, and before you know, it's taking out the previous high, and be like, oh, like we are in a uptrend, buy. We are in a downtrend, sell, not knowing what price is doing until price finally reaches the level it wants to get to. And what do you see? Can give something like this, and down, down again, we have a break of structure. Movements like this really gets people confused. But as smart money traders, what do? We find a way to actually understand the market, understand price movement, know what price is actually doing per time, right? So we find a way to understand what price is doing per time. So we can only say that we have what a lower high here after what inducement. I can only say we have a higher what, sorry, a lower high. This is a lower low. We can see we have a lower low after what inducement. I can see we have what a lower high after what this break of structure. So no break of structure, no lower high. So look at this. It is then that we can now bring this here to mark, okay, this is now a strong high, right? So even if price is coming, we expect price to respect this high. What we are expecting is that, okay, price won't come and take out that particular high there. Price won't just come and take out this particular high. So from a PDF slide here, what do we see? Yesterday I began to explain to us how this trend movements are formed, and I will continue from there today. So in this particular stuff we have on our PDF, we have some expressions of how price can just move in a haphazard manner, and people traders think that price is just, price is just forming random supports and resistance zones, and they want to actually follow it randomly too. One thing that we know as smart money traders is that price is very intentional. One thing we should know, one thing we have come to know as smart money traders is that what price is never haphazard. Price is very, very, very intentional about what it does. The way it moves, every swing that it forms is an intentional swing, right? So it's easy for people to just say, oh, supply and demand moves price, support and resistance moves price, this and that moves price. People can give any reason they feel, makes price go, and people can give any reason they feel makes price does what it does, or what they see in the market. But as smart money traders, we know one single thing, and it is this: that price is actually very intentional the way it moves, right? Price is actually very intentional the way it moves. Price doesn't fluctuate anyhow. Price doesn't just do any flimsy things. If it moves in a particular direction, it does it for a particular reason. So if price is buying, it is buying for a reason. If it is forming if it is clearing a liquidity, it's because it knows that there are certain persons fixed there. There are certain liquidities that are fixed there that it needs to clear. So price is never ever random in its approach. So today we are going to be looking at our slide, then I'll just talk a little about it, then we'll go and illustrate this in the market. We tried to do some illustration in the market yesterday, and we really could not do that because we're out of time, and we are going to be doing that today, but we have had enough of review for yesterday. So looking at today, I was talking about this. So look at this. Price only formed a lower low after what our inducement high was taken. That's the recent high was taken. And price only, we agreed that this is a valid lower high, right? Afterwards, the break of structure gave us a single high. After the break of structure, a single high again, came back and induced it. After the inducement, we have what? A low, right? A valid lower low. In a downtrend, lower lows are going to be swept. So we're expecting price to do whatever it has to do up there, take all the liquidity, then charge downwards to sweep out this low. But we only have a valid lower high afterwards liquidity, sorry, after the low, lower low, right? After the lower low is what's being eroded. So this goes on and on and on and on. Even here too, recent low inducement, strong high after the break of structure, because it's a strong low. So you can see that it is not everywhere that we included break of structure. We didn't just go about putting break of structure. We didn't call here break of structure. There are persons that do that. They see this, they call this break of structure. They can be good to call it a change of character. And this one is a break of structure. This one is a break of structure. This one is a break of structure. This one, then if all these are break of structure, then this should be a change of character. That's actually not the right way to mark chart, right? That's not the right way to mark chart. So all these levels here are not break of structure, right? At least they are not break of major structure. If you are to call that a break of structure, then be sure that you are in the minor what time frame. So if you are to call any of that a break of structure, then be sure to know that you are actually in the minor time frame, not in the major time frame. So there's a very vast difference between the minor time frame and the major time frame. So that's why we must learn as traders to pay up our time frames when we trade. So if I am a long-term trader, like maybe I'm a swing trader, swing traders are long-term traders, even position traders are long-term traders. Position traders trades longer than the swing traders. So if I, as an individual trader, I happen to be a swing trader, then you should know that I'll be using my higher time frame as maybe weekly time frame. And if I'm using my weekly time frame as my high time frame, I shouldn't come and use my daily time frame to complement the weekly. No, I should go down to 4 hours, right? So my weekly time frame is my high time frame, and my low time frame with my 4 hours time frame. So in my higher time frame, I can mark out my higher time frame structure, right? My major structure. Then in the lower time frame, I can mark out what the minor structures there. all minor structures goes in the lower time frame. So that's just how it works. So you have to understand time frame difference, right? You know, when people say we do top down analysis, sometimes people think that top down analysis has to be you starting from the weekly time frame, look for certain things on the weekly time frame, zoom down to the daily time frame, look for certain parameters on the daily time frame, zoom down to the 4 hours, then to the maybe 1 hour, 15 minutes, 30 minutes, just like that. By the time you finish doing all those stuff, you'll be mentally stressed out and you won't be able to collate all the idea you have brought together, right? You won't be able to collate all the ideas you have brought together. So the when we talk about multi-time frame analysis, we are talking about maximum two time frames, the high time frame and the low time frame. So if I'm using, like, personally, 4 hours for my high time frame, then my low time frame should be what, 15 minutes. Or if I'm using my 1 hour as my high time frame, then my low time frame should be what, 5 minutes. So you use those time frames in pairs. So that's what happens here. So if, for example, if for instance this particular move here, if for instance this particular move is marked on what, on our 4 hours time frame, then we know that on our 1 hour time frame, sorry, on our 15 minutes time frame, then we can begin to see all these ones appearing as what, break of structures, change of characters and all that. Why? Because they are what, low time frame structure, right? Low time frame structure. But in this case where this is what are we going to call this one? This is our what, high time frame structure. So in our high time frame structure, this the low, this is the major high, the major low, major low, major high, and so on as the case may be. So I'm dwelling on the high time frame structure today. Maybe in certain other times when we host a free class again, we are going to be looking into how to merge high time frame structures and lower time frame structures. Wow, I just did all those examples having my face on the screen, not okay. So let me show you what I just did. So I was like, I will consider this as my what, high time frame. So I will consider this particular part as my high time frame, and my low time frame structure will be all these ones here. So this I can't zoom down. So all these things you can't call them break of structure on this time frames. They are just lows and highs that got violated, right? Yeah, minor structure or low time frame structure, LTS, right? This high, this low, this high, this low, this high, this low. These are what, high time frame structure, the high time frame structure there, right? So let's go straight into our charts. Enough of the talking. Talk is cheap, that's what they say. So our forex charts now. So we have gone about explaining all those stuffs. Let's see some application of it. I'm going to be marking up gold here on 4 hours. I'll just mark up something very simple for us, just these few swings here. Just mark up these few swings here and show us certain things. Okay, so cleared everything. Now if you look at this, let's focus on this swing that is forming, that is coming down here now. Okay, so on this particular swing, this swing started here, going up, up on gold. And what do we see here? Let me call this our high, right? So this is our break of structure. This is our break of structure, and I will save it with capital letter US. Save. This is our break of structure. Now, after this break of structure, what do we have here? Here is the most recent pullback. Price began to go higher and higher. This is a high there. I just want us to mark this chart properly. So price formed a higher high, and this is a higher low. Why? Because these are prominent candle from our first class. We understood what prominent candles are. So this happens to be our prominent candle, and this is a low here, right? Taking out the low of our prominent candle. So this is a valid pullback here. Then price broke this high that was formed here. It's just structure high, nothing attached. Then went up. All these are not, there are no pullbacks here. You can see this candle, it's an opposite color candle, it's a bearish candle, but it doesn't indicate a pullback. All these ones are what internal, they are inside bars of this particular candle here. One bar, two bar, three bars, all these bars are all inside bar. Let me use this brush. So this candle, this candle, this candle, the three of them inside bar of this particular candle. So we don't have any activity, any proper activity happening around there, right? So we don't have any proper activity happening around there. So so there is actually no pullback here. What do we have? This becomes the prominent candle taking out the high of this particular candle here. This becomes our prominent candle taking out the high of this particular candle at this point. Now this next candle here takes out the low of this one, so this one becomes our what? Our pullback. This and this are inside bar of this. This one takes out the high of our pullback. This becomes the prominent candle. So at any point, if any price takes the low, right, of this candle, we have a pullback, but this pullback ended here, right? This pullback, this dip is the lowest part of that point there. So let's so in this case, this is where we have what, a the end of our pullback, right? It's a valid pullback. This is a valid pullback here. Hmm? This is a valid pullback here. Why? Because this prominence candle has been taken. We have some highs going up there. So this is a valid pullback, structural pullback. So if price breaks this low here, what do we have? We have inducement. This inducement I want to write with capital letter because I'm on my higher time frame. And the reason why I'm using capital letter is because I'm dealing with major structure, 4 hours. So sorry for the interruption. Uh, Inducements, and we have that. So these are high time frame inducement there, all safe. So once we have a high time frame inducement, right, it shows us that we have a structure high. Once price induces, we have a valid structure high. Is that not? Of course it is. So let's mark it up. This is our valid structure high here, and we forgot to mark our valid structure high here. We have a valid structure high here, and we have a valid structure low here. Why do we have a valid structure high? Price induced. This was the inducement that price gave here on this low, right? So price induced here. Very, oh, I really like it when I mark structure like this, because it helps us to see how that ID, okay, and save ID, enter. Save. Okay, so when I look like this, it makes me know that I'm paying detailed attention to what price is actually doing. When we mark structures like this, look at the nitty gritty. The more detail you pay attention to is the more accurate you become. When you pay more attention to accurate details, you become more accurate as a trader. You can really, really, really know what the non-money traders are actually not seeing. It pays more to focus on certain details. That if for you to just look at one candlestick, not understanding it, or just look at one level and just draw a long line and say, oh, this is my trend line and price is doing like this and price is doing like that. Yeah, trend lines are good, but as a smart money trader, there are certain things I want to use a trend line for, right? I mostly use trend line as what liquidity lines. So I'm not saying that trend line doesn't work. I'm not saying that you shouldn't trade trend line, but there's a way to trade it. There's a deeper understanding to trend lines, right? I would have shown us, but I don't want to pick up. I don't want to pick up battles with some other persons that will come and begin to castigate us. But I just know one thing about trend lines. Trend lines are good, but we can actually get more out of them. Mm, okay, so having known that, there are a few other things we may want to pay attention to uh about our structure marking. I left this in for a while, so I was silent. So there are a few other things we may want to know about our structure mapping. So we have inducements here. This became valid. What's it called? After the inducements, this becomes valid. Sorry for that. I just got interrupted. Uh, so this becomes valid higher low after this place is broken, after this place is violated. That's for that. Then we have another structure high here after our inducement, right? After our inducement, this becomes a valid what? Higher high, right? After the inducement, it becomes a valid higher high. And what do we see? After inducement, we are looking for price to come to a valid order block. And so, um, what do we see? Here, price comes and breaks this structure again, right? After this break of structure, what do we have? Keeps going up, 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 up there, and forming pullbacks here. Now we can call this a valid pullback. Let me show you something. This is a valid pullback because it's my okay. So this is a valid pullback because this is our prominence candle. Oh no, highlighter. This is our prominence candle, and the low of our prominence candle is taken, right? The low of our prominence candle is taken here. And what do we have? If the low of our prominence candle is taken, then this is a pullback, right? And price begins to go up again. This is our prominence candle here, the highest, it has the highest point on uh, price movement. And the next candle takes out, okay, no. Yeah, so if this candle takes out the low of our prominence candle, we have a pullback. So this is a valid pullback. And I think price moves higher again, forms a swing high, prominence candle, low of prominence candle taken, ends here. This is a valid pullback. And I think this is the last valid pullback before price comes here to give us an inducement here. So under the normal circumstances, we have so under normal circumstances, we have our inducement here. We have our inducement here. And this is a break of structure. We have our inducement here, and this other movement here is actually a what? A break of structure. So what do we see? Price comes and violates our low. There is something else I've not told you. Somebody will call this a change of character, but in the real sense, this is actually not a change of character. It's something called liquidity sweep. I cannot explain this for now, but the reason why I call it a liquidity sweep, I will tell you in other videos. Yeah, the, the major reason why this is a liquidity sweep is because there is no close below this strong low here. Price doesn't close below this strong low. If price has closed below, it's like it has given a candle body close, then we will say, oh, price has actually changed character. And this is on that place where the dumb money traders will get, we get intrigued and begin to look for selling opportunities around all this place here. Right, begin to look for selling opportunities. Let's look for it to sell the market. Oh, this is a good PI, because why? We have a change of character here. Let's sell it here, let's sell it here. Oh, and you try to sell it there and you fail. I say, okay, this or maybe some people must have tried to sell along all these places, all these long week rejections, taking it as POIs, and they fail. And maybe they will still come and try to sell it here, and price still keep pushing through their POIs, as a hot knife will push through butter. Remember, this is gold spot. You don't joke with it. It's very, very volatile. If you don't mark it correctly, you become a victim of it, right? See that you mark it correctly, or you become a victim of it. So, well, so there's no candle close here. I want to edit this. I want to text alignment bottom. I normally my I sometimes want to behave as a perfectionist. I like things being done on certain ways. I want all my texts at the middle. Yeah, thank you. So this is actually not a change of character. Why? Because on our higher time frame, price only swept. It didn't give a body close. And what do you see? Liquidity, all the liquidity that is here have been taken. And what does price do? Remember, price has actually induced here before. After this inducement, what do we have? We have that this is a major, sorry, a confirmed high, right? It's a higher high, but price in an uptrend, all the highs are going to get violated. So what do we see? Price comes and violates this high and gives us what? A break of structure. After the after it gives us this, after a break of structure, that's we have a what? A strong low. We have a strong low here. We also have a strong low here, but the only thing we can do is that we'll transfer our strong low from here to here. And even in this case too, we'll have to transfer our strong high from here to here, but I will leave that. That's a talk for another day. That's another teaching for another day. The smart money concept is simple and it's deep, right? So the deeper you go, the simpler it becomes. The deeper you go, the more realistic it becomes. So there are certain things I may be doing here, and whatever I do here, I do out of 5 years of experience. you know just be like, why are you seeing this and I'm not seeing it? If you have not traded the smart money concept before, it will be very, very difficult for you to flow with what I am doing, right? It will be very, very difficult for you to understand what I'm doing. But if you really understand the smart money concept, if you are following, you will have many questions. Put up your questions, and I'm going to intentionally answer each and every one of your questions uh, as time goes on. So let's keep going. Let's keep going. Once we are done with this marking, once we are done with this markup, will call it a day for today, or maybe I'll just look at GBP USD to show us that this markup is not just happening on just one pair. It's a smart money concept. That smart money concept is king, right? Smart money concept is more like the chieftain of price action. Oh man, sometimes I just want to hide, right? No, I don't mean any harm. I'm actually innocent. No, I mean no harm, but from the little experience I have, well, I'm not trying to exalt my experience above any other person's experience, but I just feel like, well, with how it serves me, with how it serves my purpose, smart money concept is actually the chieftain of price action. Okay, let's go ahead and let's see what happens here. So we have that price has actually formed a high here, right? And this is another low that price forms, perfect pullback. forms a high, another pullback here. Now if you look at this place, there's no pullback here. There are no pullbacks, right? No pullbacks here. So this is the last pullback, right? The most recent pullback. A price has formed here. Let me not forget to label my break of structure. Sometimes it's okay. So we have this happening here. What do we call that? We call that inducement. Okay, so inducement. And after an inducement, what are we expecting? We are expecting price to come to the lowest point, right? You know, take out all the liquidities, fill all the other blocks, and all the fair value gaps, all the inefficient price actions. We are really expecting price to, fill up all those places. So there's a probability price will get around this place on 4 hours before it begins to go back up. There's a probability that price gets around here on the 4 hours time frame before we begin to see it go back up. And this markup, this let's pay attention to it. You know, today is Thursday. This is the current positioning of the market. So today is Thursday. Tomorrow is Friday, and I'll be looking to see price come here, uh, maybe between today and next week, right? Next week Monday, next week Tuesday, next week Wednesday. I mean, anyway, before the end of next week, I personally look to see price come around this zone and move back. Why? Because this is the most liquid zone. This is where you have plenty of orders. Smart money did this movement here. If you have studied demand and supply properly, you know that this is a long movement after a rally, base, sorry, a drop, a base, and a rally. Someone say rally, base, rally, base. This is a drop, this is a base, and this is a rally. So we expect the smart money to come back to the base. So that aside, I know how to kill a lot. So looking at this, what do we have? We are expecting price to run back down here. So this is our inducement. Price has taken out this level here. This level really bounced price, like bounced price very well. But you know, we are looking at price coming down here. So this whole move, from our understanding, we know that we are seeing what this that looks like a lower low, lower low, inducement, lower high. Yes, that's why we talked about minor structure, right? So look at this whole movement here. It's a counter trend movement, and counter trend movements will still obey our method of what is it called, structure formation, right? But when it gets to this point, you are most likely going to see a very steep movement again. So what am I looking at? What am I looking at? In price has gotten to this point here, I will explain certain things for us. So we can see some movement maybe above, or price can just continue, come here, bounce a bit, pretend to want to take this, because there's no other stuff to take here again. So it's going to deceive some people around here. Breaks this, can play around here a while, can even induce here. And I know that the last move is going to be a very fast, steep move. And the next thing you are going to be seeing things like this. So in most cases, what you are gonna see is just that. So this is what we are expecting to see. How do I believe that price should actually run this down? Okay, remember I told you we are on major structure but counter trend move. Let's go to our minor structure. This 4 hours. Our minor structure will be on 15 minutes. Let me show you something on 15 minutes. Let me show you something on 15. Okay, so while we have this on 15 minutes, let's call this our minor structure, our minor break of structure on 15 minutes. We had inducements around this area. Let's see. So let's call this I've seen our inducement. So we have seen this here. Sorry. Uh, on 15 minutes, where do we have our inducements? We don't have any inducements here. This is the all these are just swing, 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 swing. Okay, it was a structure, no inducements, no inducements, no inducements until I think there's an inducement here. Let me show us something. This is a movement. This was a pullback. Sometimes marking structure can be very, very, very tactical. So this is a movement, this is a pullback, and what do we have? This lower time frame. So once we have candle sweep, we don't count sweep as just sweep. We count it as a break of structure. So if it's on higher time frame, we won't call this a break of structure to the high side, right? We won't call this a structure close on the high side if it's a higher time frame. But this lower time frame, there are so many rules that guide chart marking on SMC. But this is just one of them. So we'll call this what? Inducement on lower time frame. IDM on lower time frame. If we do that, then it follows that this will be a break of structure on lower time frame. This will be a break of structure on this our 15 minutes. I'm only trying to buttress something on the 4 hours why I feel that will be going down, right? Now, all this minor structure, we are still in line with our major structure. Why 4 hours is buying, 15 minutes is also buying. So we have a high here, we have all these range structures kept forming, and this was the last pullback. Supposed to be this, but let me just take this as our what? Our inducement here, our inducement. So price came down until it broke this low, right? On breaking this low, what do we have? We have something called change of character, CHOCH. So price has indicated that it likes to go downward on 15 minutes. Let me go on 4 hours and show you what it looks like on 4 hours. That's fine. So on 4 hours, oh God, what was I marking? No, 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 no. I've given the wrong markup. I have to go again. Sorry. Yes. Oh, this is the right point here. Whew. So this is our last swing on the 4 hours. Just have to do this again. Sorry for that. So this is our last swing on the 4 hours, and this is the representation on 15 minutes, right? So on 15 minutes, what do we have? Look at this. Yeah, becomes clear, 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 clear. Okay, so we have this structure broken here. We have inducements here, or that's a structure high, sorry. And this becomes what? Our inducements, IDM. Why? Because this was where price took out the recent low that was being formed, right? On 15 minutes, look at the last break of structure was here, and after this break of structure, there was no inducement until price went higher and came back, took this recent low and busted higher, right? So busting higher really meant that this was a what? On 15 minutes, this became our, excuse me, this became our valid low on 15 minutes, right? This became our valid low on 15 minutes, right? Then price has given a pullback, went up, giving a pullback, another high again. This becomes what? Our inducement here. Why? Because price has violated it. Okay, IBM. This becomes our inducement here. Price has violated it, and If price violates this place, our inducement is here. This is our strong low where we are not expecting price to violate. We are not expecting price to violate this place. So once price does that, we have a what? A change of character on 4 hours. Sorry, on 15 minutes. One thing about 15 minutes, okay, I won't tell us. I won't tell us that. I'll reserve that secret for. I'll reserve that secret for my students. So look at this. This 15 minutes change of character, right? Well, on 15 minutes change of character, we are still looking at our 4 hours inducement here, right? Well, so 15 minutes change of character. After that, price comes down until it gets to the what? Recent 4 hours low. Swept it, went up for a while. Anyway, so low, high, low, high, low, high, low. We don't have any violation until here. Sorry, I think we have a violation here. So we have a violation here. That is to say, this has become an inducement. See, after the change of character, we were looking for an inducement. Change of character means that price has changed direction. The character has changed from an uptrend to downtrend. So this is an inducement here. And after the change of character, this becomes a strong high, right? A high that we are not expecting price to violate anytime soon. The only reason why we are expecting price to violate that high is because this is a minor structure. So price will still come back for it much later, but for now, that's the strongest high we have. And then what do we have here? So after the inducement, this becomes what? Our next strong high, right? Or sorry, this becomes our strong low. After inducement, we have a strong low, right? Then a strong low. If a strong low is violated, what do we have? We have a break of structure. If a strong low is violated, what do we have? We have a break of structure. And what do we do? This becomes a strong high after the break of structure. This becomes a strong high after the break of structure. So inducement low, other inducement low. What do we see? If price comes and takes out this inducement low, usually what do we have? That's where I'm going to be looking for my trade because that's the only valid and unmitigated uh, block there. And this is how perfect price would have given us that entry there, not because I'm seeing it, but because that's where we should take on this 15-minute structure. That's where the next trade should come in. So looking at that, this inducement. So after an inducement, what we look what are we looking for? We are looking for how to confirm our strong low, right? And once we have a low there, what's the next thing we are looking at? We are in a downtrend for now, minor structure downtrend. So we are looking at price violating this low, right? We're looking at price violating this particular low on 15 minutes. Is it going to violate it? Well, it does. So it does violate that low there. What do we have? Where will our inducement be? Kept going, kept going, kept going, forming lows, and so this becomes our inducement. Some people want to look at it as this. Well, price has every liberty to travel from this down here. Price has every liberty to travel up to any point it wants to get to, up to this point, right? Because that's our strong high now. So price has the liberty to travel anywhere till, okay, sorry, till around this point. It shouldn't break it because if it does, then we have a change of character. So if price does, we have a change of character, right? So we have a change of character. Once price does that, once that character is changed, look at this. Remember, our real 4 hours POI is down, 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 down here. So we don't expect price to just change character, bust these highs, and continue going. It can do that. Price can actually do that. But what we are actually expecting is that price should come down here and take up all the liquidities. So price can just keep forming lower lows, lower highs. So look at this. At this point here, you may want to feel like, oh, price has changed character here. If you check on this structure, you can call it an inducement on 4 hours. Well, let's keep going. This was a 4 hours inducement. This another one here, and we continue to see, and we can mark and mark and mark and keep marking this thing. Keeps going, keeps going. So that's structure marked there. Look at this one again. After it comes down and breaks this structure here, comes down and breaks the structure, takes out the recent high, right? It can actually feel this, of which it has done. It can feel this and start going down. It could come and feel this, to come back up and feel this. That's after this, after taking out this load, to come back up and feel this and go down. But I really do expect it to come back there because of our order flow has been fulfilled. So what I'm really expecting to see is some downward movement here, coming to break this low. Price has begun to form a redeeming pattern from our smart money chart marking method. It's forming a redeeming pattern with our smart money chart marking method. So what I'm really expecting is for price to come down and break this low here, just as it has consistently done. Induced, down, induced, down. If I go to 1 hour now, you will see it again very clear. Okay, so just look at that. So, or back into our 4 hours, the higher you go, the clearer it becomes. So on our 4 hours, we can call this our inducement here. Though these are major structure inducements, but let's allow minor structure, uh, our pullback kind of structure, to give us something we can trade to. So looking at this all the way as induced, got to a POI, it's running down, came here, induced again, got to a good POI, and it's actually running down. So I'm expecting it to run down here. So I will keep these screenshots today. I'll just keep these screenshots today, and at some other points, at some other time, we'll reference it. Today being the 22nd, we'll reference this screenshot again next week, maybe in our next week live video. We'll actually reference this particular screenshot. So back to our slide. We have actually spent about close to 2 hours conversing on this particular market movement. So what I can tell you is this: our 3 days free class has actually come to an end. But if you really understand what I was teaching today, what I taught you today, what I taught yesterday, and the day before, if you can really put them into perspective, it will become easy for you, right, to mark structure, and you won't be doing things randomly on the chart again. Once you can put those things into perspective, it becomes easier for you to mark structure, and you won't do things randomly on the chart again as a trader. So okay, I think I like to be, in many cases when I do my things, I like to be as natural as possible. So here once again. Uh, Thank you for joining us. Thank you for watching these videos. Thank you for you know uh, looking through till. Thanks for hanging on till this point. I have come to the end of smart money chart marking pattern. I hope you have learned a whole lot. You must have seen certain reasons why you couldn't mark the charts properly, you couldn't pull up profitable trades, why you couldn't know how to pick your POIs. I wish I can really go deeper here, but I crave your indulgence too. If you want me to make more videos, just comment, ask questions, you know, leave a like, subscribe to our YouTube channel, and you see me do more videos. You see me make more and more and more and more videos. So as you just keep us engaged, follow us, follow all our social medias, TikTok, Instagram, WhatsApp. We are Pitch Trading Flow, and we have our Forex Academy coming up this June, and we are going to be exposing a whole lot. Like we're doing a whole lot in this particular Forex Academy. So stay tuned, stay focused, and thanks for being here.